Years ago, I was exactly where you might be right now. I'd scroll through investing forums at midnight, read article after article about dividend stocks, watch YouTube videos until my eyes hurt, and you know what I do after all that research? Absolutely nothing. Zero. I'd close my laptop, tell myself, maybe next month, and go to bed feeling like a complete failure. It's not that I didn't have the money to invest. I had a couple $100 sitting in my checking account doing absolutely nothing. It wasn't even about understanding the stock market because honestly, I'd consumed enough content to teach a college course on dividend investing at that point. The real problem? I was terrified, like genuinely scared to hit that buy button. So, what changed? How did I go from being frozen with analysis paralysis to actually building a dividend portfolio that pays me real money every quarter? I made one decision that shifted everything. I stopped trying to find the perfect investment and started looking for the good enough investment, and that's where SCHD came into my life. SCHD, the Schwab US Dividend Equity ETF, became my entry point into the investing world. It's basically a basket of about 100 high-quality US companies that have a strong track record of paying dividends. Chevron, Pepsi, Home Depot, Verizon, businesses that have been around forever and aren't going anywhere. You're not betting on some startup that might become the next Amazon or might completely implode. You're investing in established companies that generate actual profits and share those profits with shareholders every quarter. The fund automatically does all the hard work for you. It screens for companies with strong fundamentals, consistent dividend growth, and financial stability. So instead of you trying to analyze individual balance sheets at midnight and second-guessing every decision, SCHD's methodology does it for you. It's like having a financial advisor working for you 24/7, except you're paying a tiny expense ratio of 0.06% instead of thousands of dollars in management fees. My strategy was simple, maybe too simple by some people's standards, but it worked for me. I decided I'd invest a chunk up front and then add to it whenever I could. No trying to time the market, no waiting for the perfect entry point. I just started. My total cost basis ended up being $10,457. Now, I have 381 shares at an average price of about $27 per share. I didn't invest all of that at once. I built this position over time, adding money when I got bonuses, tax refunds, and extra cash. The point is, I started with what I had and built from there. My current portfolio value is $10,513. That means my total paper gain is $55. That's it. And I can feel some of you thinking, wait, that's all? You invested over 10 grand and you've only made $55? That's less than a 1% return. And yeah, you're absolutely right. If I pull up my portfolio right now, I'm barely in the green on paper. Some days I'm actually in the red depending on how the market's doing. There have been weeks where I've watched my account value swing by hundreds of dollars in either direction. But here's what changed my entire perspective on investing, and this is probably the most important thing I'm going to say in this entire video. Those paper gains, that number that shows up in my account, that's not why I invested in SCHD. That's not the game I'm playing, because while my paper gains look underwhelming, there's another set of numbers that tells a completely different story. Let me walk you through my dividend journey, and I want you to feel what it's actually like to receive these payments. September of last year, $9.10 hit my account. I remember checking my phone during lunch break at work. Honestly, I felt a little disappointed. It seemed so small, almost meaningless. Then December came around, $37.80. Okay, that's more than 4 times what I got in September. That could pay for a decent meal or cover my streaming subscriptions for the month. It still wasn't life-changing money, but I hadn't done anything. I didn't work for those $37. I just owned shares, and money appeared in my account. In March, I got $64.40. Now I'm starting to feel something different. That's real money. That could fill up my gas tank. That could cover groceries for a week, and the pattern was becoming clear. These dividends were growing, not just because SCHD was increasing its distribution, but because I had been adding shares throughout the year. June hits, and boom, $87.99. Almost $88 for doing absolutely nothing except holding an investment. I won't lie to you, I was checking my account more frequently at this point, not obsessively, but I was actually getting excited about dividend payment dates. It felt like getting a small bonus from work every 3 months, except I didn't have to ask my boss for permission or work extra hours. And then, just a few days ago, September's dividend came through, $98.52. Let me repeat that because it still feels surreal to say out loud. $98.52 in one dividend payment. That's more than 10 times what I received in my very first SCHD dividend just a year ago. This is what they mean when they talk about compounding dividends, but nobody explains what it actually feels like to experience it. You know those compound interest charts that show exponential curves going up and to the right? Those always felt abstract to me, like theoretical math that works on paper but doesn't translate to real life. But this is me living that curve. Every quarter, I receive dividends. Those dividends automatically get reinvested into buying more shares of SCHD. More shares means more dividends next quarter. More dividends means even more shares. And the cycle continues, building on itself, growing bigger with each rotation. Right now, based on my current position and SCHD's dividend track record, I'm set to receive an estimated $394 in annual dividends. Think about that for a second. Nearly $400 a year just for owning this investment. That's not counting any additional shares I might buy. That's not factoring in potential dividend increases from SCHD. That's just based on what I have right now. And I'm holding all of my SCHD shares inside my HSA, my health savings account. An HSA has what's called a triple tax advantage. Triple. That's 3 different ways this account saves you money on taxes, and most people have no idea this exists. First, the money I contribute to my HSA is tax deductible. That means every dollar I put in reduces my taxable income. Second, the money grows tax-free. Those dividends I'm collecting, not taxed. Those paper gains, not taxed. Everything compounds without the IRS taking a cut. And third, when I eventually withdraw the money for qualified medical expenses, that's not taxed either. So if I held SCHD in a regular taxable brokerage account, I'd owe taxes on those dividends every single year. Depending on my tax bracket, that could be 15% or more. But in my HSA, I keep every penny. And before you say I can only use HSA money for medical expenses, well, we're all going to have medical expenses. Doctor visits, prescriptions, dental work, vision care, even things like bandages and sunscreen count as qualified expenses. And if by some miracle I'm super healthy and don't need the money, once I turn 65, I can withdraw from my HSA for any reason, not just medical, and it's treated just like a traditional IRA. It literally becomes another retirement account. SCHD isn't going to make you rich overnight. It's not going to double your money in 6 months. It's not exciting enough to talk about at parties or brag about in group chats. But you know what it did do? It got me in the game. It started generating passive income. It gave me a reason to learn more about investing without risking everything on individual stock picks that could blow up in my face. The hardest part isn't picking the right investment. The hardest part is starting. And once you make that first purchase and receive that first dividend payment, even if it's tiny, something shifts in your perspective. You're no longer someone who thinks about investing. You're someone who invests. You're in the game. You're building wealth, and you're taking control of your financial future.